Housing investment will fall further from record levels into negative rates of growth next year, as the Sydney and Melbourne markets prepare for a downturn following the government crackdown on investors. The sector has driven the economy and fueled a jobs boom, particularly in New South Wales and Victoria, but will now come off its peak according to official forecasts revealed in Monday's mid-year budget update. Treasury has penciled in a 1.5% drop next year after a similar fall this year in a forecast that leading economists have labelled optimistic. The news will fuel speculation the Sydney and Melbourne markets are in for a long-term downturn and give locked-out first home buyers hope that the housing market is finally in a sustained retreat from its stratospheric heights. What we have seen is a fall off a very high pace of dwelling investment, Treasurer Scott Morrison told reporters in Canberra on Monday. I am encouraged by what I am seeing in the housing sector. You'll be aware of the measures we took early in the year which have had the desired effect of cooling the more enthusiastic investor parts of the market, particularly in Sydney and Melbourne. Importantly, it has damaged the other markets, he said. Restrictions on the number of investor loans helped Sydney house prices fall by 1.3% in the past 3 months, according to the latest CoreLogic figures, while Melbourne continued to grow, but at a slower pace, of 0.5% in November. With the slightest change to interest-only lending, we've seen Sydney house prices fall from 15% to 5% in 6 months, said Mr. Morrison. That's with the slightest, scalpel-like change. In March, the OECD warned of a rout in Australian house prices that would lead to a new economic downturn, as both prices and household reached unprecedented highs. JP Morgan economist Tom Kennedy said those prices would now keep falling. Our expectation is for national dwelling price inflation to continue moderating in 2018 as macroprudential measures weigh on lending activity and the record number of dwellings currently under construction are completed, adding to supply, he said. The lower prices will be coupled with a tax-free boost for first home buyers from next year. Potential homeowners will be able to contribute $30,000 in superannuation towards a house deposit after the government secured the support of the Senate crossbench. Mr. Morrison said Australia's housing market remained a key concern internationally and the slowdown had reduced anxiety of a collapse. I think we've been able to convince agencies around the world that our housing market issues have been largely driven by supply problems and that the values are real but yet high, Mr. Morrison said. And what they are concerned about is a hard landing in the housing market. So far we've ensured a soft landing for those markets, which is good for the economy. Industry super chief economist Stephen Anthony said the government's forecast of only a 1.5% dwelling investment fall next year was rosier than many in the sector would expect. That is a somewhat optimistic view. It does look like Sydney, Melbourne and Brisbane are slowing. You would have thought relative to 6 months ago there is less likelihood of stronger dwelling investment in 2018.